This is Marek Fuchs here today to talk to you about what happened with healthcare stocks and the financial markets in general last week, and more importantly try to puzzle out what might be happening in the coming week. Now, with Friday the fiscal quarter ended, and it did so with a wheeze and a whimper. Traders had been on autothink pretty much the whole quarter, thinking that a financial recovery was right around the corner and driving stocks up accordingly. But a lot of those traders started turning empty-hearted with all the economic reports that came to the fore last week. Durable goods, for example, were down 13%, the worst in 3 years. Gross domestic product, the final revision came in, and it was at 1.3%, which was cut to ribbons from the previous estimate of 1.7%, which obviously was no great shakes. But at 1.3%, we are inarguably dancing as close to the lip of the cliff of a recession as is humanly possible. Now, consumer spending numbers came in, and at first glance, they looked decent, up 0.5%. But nearly all of it was gas. In other words, people paying higher prices for gas, not any overall strength in the economy or demand or ability to spend, because real income was actually down, and that's terrible. Emblematic of all this was Nike, a consumer staple stock that used to be old reliable. They had hit numbers year upon year upon year. Well, they reported disappointing earnings. They had weakness all over the place, internationally, especially in China, and that's alarming. On the Apple front, it seems each week we have something about Apple to talk about. Well, they apologized for the MAP program in their new iPhone 5. This was interesting, as their dearly departed CEO, the late Steve Jobs, apologized for nothing, and here was Tim Cook, all but apologizing for the Lindbergh kidnapping. Hey, there are a couple of interesting things that came to light with this. Number one, it seems self-evident, but Cook has gotten a lot of credit for taking over from Jobs, but he is as yet untested. Obviously, until he starts shepherding products through, we need to reserve judgment. Well, the guy hasn't done a bad job, but we can't adequately say that he's done a good job. But the New York Times was actually right to point out that from problems with Siri to this and other items, a real link between Apple's few toe stubs is that many of them involve internet products. In other words, Apple is really concerned with design, they're really concerned with software, and they've kind of ignored the internet or put it on the back burner. And these products are really important for Apple's future. It's very interesting, but Apple's so secretive with these products that it's hard for them to test these products. So outside of that, in the economic tumult we had last week, we had healthcare stocks, including some of the biggies like Merck, J&J, and Pfizer doing well. And that's because up out of the ashes of bad economy come the roses of healthcare. People tend to flee to them when they're looking for safety, when they're looking for a dividend, when they're looking for a relatively recession-free business. And all those stocks and others perform at least comparatively well. Now, going into the coming week, we're looking at a few things. Number one, it is flu season and presidential debate season. This means a few things, but something especially important for healthcare, because traders really want to get a bead on where these two candidates want to take things in terms of healthcare. We have a clearer sense, or a slightly clearer sense with Obama. It's very vague, woolly, and murky with Romney. The New England Journal of Medicine obviously came out with an article I'm sure a lot of you saw, trying to hone in on what these candidates thought about healthcare and where they wanted to take it. But you could lay page upon page of this report together and can't really come to a conclusion. So the debates are really, really important. Also, don't think traders have settled this race just yet. With all the bad economic statistics, they're really going to be rethinking Obama's recent strength if Friday's jobs report comes in badly. And I have a sense that it might. It's really important when you're looking at stocks to divorce yourself from any rooting interest you might have with either candidate. But after those statistics last week, including GDP and durable, all of it, I can't see a good jobs number. If the jobs number comes bad, well, that could give Romney a second win or a first win, because he didn't have much of that. Also this week, on Monday, we have Ben Bernanke, the chairman of the Fed, talking, so traders will be all ears on Monday. On Wednesday, we have Hewlett-Packard, one of the rusty old computer companies that the market is so worried over, and rightfully so. They're meeting with analysts to unveil their latest, greatest comeback attempt. Along with healthcare, technology has been a real strength of the stock market, but some of these big technology companies that have really been kicked in the shins by these tablets have really lagged. And this Wednesday will be important, but no matter what they say, they have a tough job on their hands. So I believe they're in the midst of a comeback when I see it. I really wouldn't jump at the stock over this. Outside of that, pretty much every week we're going to talk about one or two drugs that are up for approval, or should be up for approval before the end of the year. And this year we'll mention Biogen's multiple sclerosis drug and Cornerstone Therapies hypothermia drug. It's a hard one for me to pronounce, and I apologize for that. But outside of that, if you disagree with me on any of this, and you certainly won't, but if you happen to, feel free to tweet me, and my Twitter handle is below. It's at MarekFuchs. Just feel free also to tweet me any other questions that you might have. But the main thing is looking forward to the week. Have a happy, healthy, and profitable one, and we'll talk next week.